Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, March the 22nd. The year's 2021. Let's talk trading. How to pick a method to trade with Walmal. Um, there was a trader out there on YouTube was talking about having some one-on-one and being there's so many methods, trying to find one that fits him, and then somebody sent an email and said, you send out so many donational indicators, nobody could possibly use them all. It's like, you should just send out just a few to. So I thought we'd start off. This is probably going to be a series by bringing Walmal on and let him kind of tell you how he picked the Walmal method. But just so you know, these videos are for educational purposes only, and your results may differ from mine and from Walmal. So Walmal, how did you pick the Walmal method?
Well, the reality is, I've said this a number of times with you, on the phone and as well as with our fellow traders on videos, and that is that you got to know who you are. You need to know who you are and know what's comfortable for you, what's comfortable in your shoes, and what's not so comfortable in your shoes. And by training, I'm an engineer. And what is an engineer? And I'm actually a nuclear engineer. Haven't done any nuclear engineering. Went to school, got the degree, and never did it. But that's an aside. But that it does point though to a little bit towards what my personality type is. And my personality type is that I like to have things very, very structured. I like to have things in such a way that, I can go and categorize things, and that's just who I am. My wife, I love her to death, but she's the most spontaneous person that's ever lived. I mean, it's the type of thing where, I tease her all the time and say, one of these days I'm going to wake up in the middle of the night and find out that sometime between the time I went to bed and I woke up in the middle of the night, she changed the furniture in the house, because that's just who she is. That's not who I am, and I can't trade that way. I need to be able to trade in a very structured environment. And so what that meant was I needed to rely upon my engineering background, and the vast majority of my engineering background is going to be based on statistics. When you look at engineering, it's basically a type of physics degree and a type of mathematical degree with a lot of statistics behind it. So I started looking around, trying to find things that I could see that I could actually know would work statistically. And so that's when I got the idea of looking at your frequency distribution models and looking and seeing what it would do at certain types of events during the day. And one of the things I saw from the observation point of view was that, the market tends to move, X pips in this direction or X pips in that direction. It tends to do it every hour, it tends to do it every day. And so I said, well, that's a really good observation. And then I said, but that's not enough for me. I need something more of that. And that's when I brought your frequency distribution into it. And I started going and running. And this was the earlier version that you had where you couldn't break it apart by hours, but it did it basically you could go and set up a range of times. And so I actually spent all the time going and taking it and running those statistics using that very helpful tool and writing them down, putting it into Excel, and then mapping it out. And what that showed me was if I traded between this time and that time, I had a statistical advantage. And not only that, if I only go to look to get a certain number of pips, I've got another statistical advantage. And if I go and when I went and looked and said, not only that, but I can also go and limit the amount of losses that I would take. That's another statistical advantage. So for me, it was just like stacking on what's best for my personality, having those parameters. And I know, Tiro, you've seen me do this a lot of times where you'll send me a chart or something like that, or you'll send me a template. And the first thing I do is I throw those the sweet spot lines up there. And the reason why is because I need to go and have that type of structure around me. I can look at price and know that price right now on my chart anyway, it's at 39.1. So I know I'm between the 30 and the 40 line, But having those lines there, I don't know, it's just so comforting having those lines there. And so I needed to go and find a method for me that I was able to go and would go and work with that type of structure. And so that's how that's part of how I went and developed the Walmal method, taking some structure that you had put in place, putting some structure on the chart, and finding a place of comfort. Because I think that that's the most important thing about going and figuring out a method, finding a method that you find comfort in, that you don't have fear in, you know that statistically or whatever reason that you're using to go and enter a trade, I know that, I may take a loss this time. I mean, this morning I was actually down a bunch. I was down about 15 pips, but and now I'm up like about 30 or 40 pips and I didn't stop trading. I didn't stop trading because I didn't make any mistakes. It was just that the market went against me in the very early hours of trading. And it came back and, it rewarded me because I had comfort in that method and I had comfort in my ability to trade within that method.
Well, I bet the fellow traders out there might be interested in what methods did you try and leave behind?
I did a lot of candlestick patterns. I did a lot of that. I did a lot of support and resistance. I never really got too much into a lot of what you call the squiggly lines. I guess I did to a certain extent. I'd look at the EMAs and the SMAs and just, I wouldn't take a long trade unless I was above an EMA or an SMA. I did some of that. But those were not triggers. Those are just confirmations to go and look for a trade. But most of my trading was off of patterns. In other words, I'd be going and looking for, first I'd be going and looking and say, hey, are we close to support? Are we close to resistance? The second thing I'd do is I would go and look for candlestick patterns. When I say that, I'm not talking about one candle patterns. I'm talking about multiple candle patterns. For instance, looking for flag patterns and pennant patterns, all those types of things, and they all work. There's no question about it. But but my problem with it was, I always felt uncomfortable doing it, even though I made some money doing it. I felt uncomfortable doing it every time because there was no way to statistically show that's what's worked in the past, and that was always my problem with it. So every time I got into a trade, I'm literally was sitting at the edge of my seat, finger on the close button, waiting to get stomped on, and the reality is, those things actually do work. And for some people who maybe a little bit, different than my personality, I know that they can be very profitable. I got a friend of mine. He trades nothing but pennant flags, and he's very, very successful doing it, but that's just not me. That's not who I am.
Now, you mentioned support and resistance. I'm sure a bunch of the traders out there have studied it, probably have some indicators, might even use some of the ones I wrote. How did you define support and resistance?
I was actually going and looking for points of interest, meaning I would go back and look in the chart. Where did price change in the past? Where did price struggle in the past? And I still do that. But that was those. I was looking for breakouts of those points, or I was looking for reversals of those points. But that's really how I was trading that. And, I'd win, and I'd lose. And, I'd be, right at the end of the week, I'd probably be right at break even in terms of actual money made,
Mm-hmm.
And that's where I got into trouble with it. But that's how I was defining it. I just look at, I would do what they would call top-down analysis. In other words, I'd start with the weekly chart and move down to the daily, then move down to the H4. I'd then go and move down to the H1, and I would look for points of coalescence. In other words, where it seems that those places on the charts would coalesce between all the different time frames, and then I'd look for the breakout of those areas, or look for the reversal of those areas. Again, I know people make a lot of money on that, so I'm not going to go and stomp on somebody else's parade. I'm just saying that it's just not for me. Now, here's the thing, though. Everything that we learn in the past is useful going into the future. And so, a lot of times I'm sitting here, and if I go in on a Walmal trade, and I see that, hey, I look left, and I see that, it just, every time it gets to the 40 line, it gets stomped on hard. I'm going to say, you know what? I know a little bit about this support and resistance stuff, and I know that's a problem area. Why am I going to try to go along there? Why don't I wait for it to go in and prove that it's actually going to break that area? And if it breaks that area, then yeah, fine. Okay, now we can go in. So instead of maybe going in at 40, I go in at 42 or 43, or I wait for the break of a previous hour high or something like that. So I modify things a little bit on the fly. That's a little bit more of an advanced way of doing Walmal, but it's the same method. It's just that it's just taking some things that I've learned through experientially to go and add to it.
Yeah, because you mentioned that, I'm looking at how many times it's failed to close above that 40 line, once it crossed it. And yeah, right now, yeah, I think my daily open's around 37. Actually, it's right here on my chart. It's at 38.37. So that was yesterday's open. Today's at 38.38. So, but I have a Sunday. Let's see. No, yeah, I've got a Sunday candle on this broker. So we're right around that open. So price has to expand, range away from the open.
Right. And the thing is, because we're right at that open, it very easily could go and expand in the upward direction past it, or it could expand away from it in a downward direction. I mean, today, at least on my charts, we got a 59 pip range for the day. That's pretty low for the pound. In fact, 2 weeks ago, we saw a couple days that were like that. But generally speaking, we like to go and see the pound somewhere between 75 and 120. That's typically what we see on a day. And we're 11 o'clock on the Eastern time zone here, so we got some time yet for it to expand in that direction. So it probably will go and expand. But at the same time, look how many times it tried to go and close above that 40, and it's just gotten stomped on. So over the last 2 hours, it's gotten stomped on pretty heavily. I wouldn't be looking to go long there. I'm just going if I miss a trade, I miss a trade. I'd rather go and miss a trade and not get stomped on. That's only smart. And that's again me with my methodology or my personality of like to go and have some statistics behind me too, because or have some structure behind me, not statistics but structure, because I look back at that structure and I think, time in and time again, if it does break it, it breaks it by 4 or 5 pips and then reverses off of it pretty hard. But most of the time, it doesn't even close above it. Well, why am I going to try to go and cheat it? I mean, it seems a little strange to me.
Yeah.
And I think it was on. Go ahead.
I was just going to say, because I've got the M5 chart up here, and there was a 2-ball put in a few hours ago. And that acted as a support level, but then a 1-ball came in last hour at that same level, so support turned into resistance. And so now we're going to see if we can break through that resistance again.
Again, yeah, exactly. And so, you just got to, but getting back to our topic, we got to pick a method that suits you. Well, you need to know who you are. If you're the type of guy that's just, you can't hold an attention span of more than a minute or 2 or 3, well, I guess you're going to have to scalp and figure out how to do that. But if you're the type of person that, you don't have a problem with sitting in a trade for a long period of time and maybe even seeing the trade go and run against you, a bunch of pips, well, maybe then what's really going to be good for you is to go and do some type of swing trading. You need to go and figure out who you are as a person, and what I will say is that, I really believe this, and that is that I don't care if you're a really good scalper and you're a really good swing trader. At the end of the day, those two different traders are going to make about the same amount of money, because what they've done is they've matched the method to who they are.
Well, okay, fellow traders, the fastest 15 minutes in trading is just about up. Actually, though, I thought maybe I should run through a chart here. You can see all the gaps filled, the weekly open gap. So hopefully, if you watched the video from last night, you made some profit there. The pivots, we actually on this chart, we actually hit the pivot. On the on my other chart, though, we hadn't, and I was waiting for, I think the pivot was at 80 something. So once again, depending on your broker, these numbers might be off by a pip or two, and that's the difference between taking a win and taking a loss sometimes. And once again, we haven't quite hit that the pivot from, this is a Sunday candle here, so like I said, I forgot to switch brokers when I made this video. So fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.